In crypto, speed matters, but trust matters more. At Caleb and Brown, you're never on your own. We connect you with your own personal broker and a 24/7 team, ready to help you buy, sell, or swap over 250 digital assets with one flat, transparent fee. No spreads, no slippage, no hidden costs. Get the best market prices through deep, aggregated liquidity executed by our professional trading desk. Your funds are secured with institutional-grade cold storage for total peace of mind. Track every move in real time with our intuitive client portal, anywhere, anytime. Whether you're trading as an individual, trust, or business, we give you speed, security, and peace of mind. Thousands of clients in over 100 countries already trust Caleb and Brown. Visit calebandbrown.com and start your personalized crypto journey today.
And welcome back to another episode of the Blockchain Brew Show. I'm here today running a quick stream by myself. T-Square's taking the day off. We all gotta take the day off sometimes. So, that's what we're here to do is, help each other, stay consistent and not burn out and keep showing up and delivering content and building community for the long run, right? So we're going to dive on into some news and some charts today. I'll go ahead and share my screen. I don't have a beer yet. It's a weird time of day. I mean, it's a Saturday. 2 p.m. is definitely an appropriate time to crack a beer, but my wife and I took the dogs out, for a hike this morning and, haven't eaten lunch yet or anything like that. I do have this pumpkin cold foam cold brew from Starbucks. It's a pretty low sugar option, so I'm holding off a few more hours, I think, until I crack a beer. So I don't have one on the stream today, but I'll be back at it next time for you guys. Let's see. I'll share my screen and dive into some news. Stage. All right, let me turn this music down just a bit and we'll dive into it. Okay, options and derivatives to take Bitcoin to $10 trillion market cap. Now, I don't think Bitcoin alone is going to a $10 trillion market cap in this run. Whether that run tops out in Q4 of this year or extends into next year, which I'm starting to be in favor of an extended cycle. Now, those of you who have heard me talk about this for any length of time know that I don't think it's as simple as traditional cycle or extended cycle. I think that we're going to get a very real top in Q4, and the question is whether we make either a double top or a higher top sometime in Q1. That remains to be seen. However, I think that the argument about the 4-year cycle will continue well after this run that we're going to get. So, I won't belabor that right now. Some of you have already heard it. I will definitely talk about it, at length in the future. But the basic premise is that we're going to get cycles within cycles. And yeah, I'll explain that another time. There's also other clips out there of me explaining that. So, options and derivatives market to take Bitcoin to $10 trillion market cap. Maybe the total crypto market cap, but I don't think Bitcoin alone gets there until maybe the next cycle. But let's see what this analyst has to say. Traditional financial instruments cushion volatility and attract institutional investors to Bitcoin, a sign of market maturation. Derivatives products like options contracts, financial instruments that give investors the right but not the obligation to buy or sell an asset at a predetermined price, will drive Bitcoin market capitalization to at least $10 trillion, according to market analyst James Van Straten. Now, I agree with this, that options and futures contract, the derivatives market in general will drive Bitcoin to $10 trillion. Yeah, the question is just when. Van Straten said that the options and other derivatives attract institutional investors and cushion markets from high volatility that is the hallmark of digital assets. Guys, this is the reason that we're going to get cycles within cycles. Listen to what he said. Cushion markets from high volatility. That tells you what you need to know. Diminished losses would mean, oh guys, look at what we have. We got a BYDFi ad on Cointelegraph. You guys know that BYDFi is our exchange partner of choice, and you can find our link in the description below that gives you, anywhere from 20 to 60% deposit bonus, which is, no trading volume involved with that. You deposit $5,000, you get worth of assets, you get $1,000 in your bonus wallet without having to meet any minimum volume. So that's pretty big there. Check out our link. It will also give you access to VIP trading signals in the Discord. So check us out. But, listen to what he says, though. He says that, derivatives will attract institutional investors and cushion markets from the high volatility that is the hallmark of digital assets. That's a mouthful, and it's a sentence that you might just breeze past. But this is where you read between the lines and you realize, if you know what you're looking at, that diminishing losses means that Bitcoin, 5-year gain. Yeah, exactly. I'm with you now. The data has begun to convince me. Okay. However, what I think remains to be seen is the strength of the Q4 pump. Because if it's very strong, you know, Q1 of next year could look like a double top. Or it could look like a somewhat higher top after a correction. Even a significantly higher top is fine, but I will still be taking profits off of a big Q4 pump, which I do believe we're going to get. So, but yeah, like the writing, you have to learn how to read between the lines of sentences like this, because diminishing losses means that Bitcoin will recover from those losses much more quickly than it will recover from a traditional 70-80% bear market that BlackRock and Grayscale and ETF issuers and the United States government and the Trump family and Michael Saylor all do not want to see. So, you know, diminishing losses will lead to quicker recoveries, and I believe that that means that we will see cycles within cycles. The 4-year halving will continue to play a very important role in the Bitcoin crypto, 4-year cycle going forward. But we're going to see cycles within cycles, in my opinion. So, hopefully that means that retail interest also, I mean, maybe I shouldn't say retail interest because it makes you think of retail euphoria, but maybe I just mean crypto YouTube viewership, right? Crypto content consumption. Maybe that also means that we don't see lows like we saw in the past on YouTube and such. That would be very good for us. So yeah, let's see here. Van Stratton says that options and other derivatives attract institutional investors and cushion markets from the high volatility that is the hallmark of digital assets. He pointed to open interest for Bitcoin futures on the Chicago Mercantile Exchange, CME, the world's largest derivatives marketplace, as evidence of a shift. Van Stratton wrote, CME options open interest is at an all-time high, partly driven by systemic volatility, selling strategies like covered calls. This points to a more mature market structure with deeper derivatives liquidity around Bitcoin. This is how Bitcoin gets to a $10 trillion market cap. CME options open interest is at an all-time high, partly driven by systematic volatility, selling strategies like covered calls. BlackRock's new covered call Bitcoin ETF, which will use CME options, will drive new volume to CME. However, this makes upside moves less dramatic and dampens volatility, all points to a more mature market structure. Reduced volatility works both ways, and the crushing drawdowns common to crypto markets will also dampen the meteoric gains traders have become accustomed to, Van Stratton added. Market analysts continue to debate the effects of the financial derivatives products and investment vehicles on the Bitcoin market cycle and the broader crypto market, with some arguing that all signs point to market maturation, while others say that investor psychology is the true undercurrent that moves markets. Is the 4-year market cycle dead? Analysts remain divided, and they will continue to remain divided fast forward a year from now, I'm telling you. Analysts remain divided on the effect that institutional investors, investment vehicles, and financial derivatives are having on crypto markets. CEO of financial services company Zappo Bank told Cointelegraph that Bitcoin's 4-year market cycle isn't dead, and markets will continue to be influenced by news cycles, crowd sentiment, and investor psychology. Look, I believe that this is true and that an extended cycle is true. I think that both of those things are true. I think that we have to, and when you, if you're deep into hey, what's going on, Ted? I'll probably take enough profit out to get my cost basis to zero, and that's that's exactly the wise thing to do. If you're someone who's deep into theology, and I'm just speaking for me, you learn how to live in the tension of two truths. Okay, for example, the sovereignty of God and the responsibility of man, right? I'm not gonna dive too deep into that right now, but you learn to live in the tension of two truths. Okay, and I think that I think that that's where you need to learn to live in the discussion of the 4-year cycle. Is the 4-year cycle dead? No. Are we going to see an extended pump into next year? Probably. So, yeah, I mean, to me, those are not mutually exclusive truths. Meaning that an affirmative answer to one of those propositions does not render an affirmative response to the other truth impossible, right? So, anyways, I don't believe so. Anyways, so many people are saying, oh, the institutions are here, and therefore the cyclical sort of nature of Bitcoin is dead. I'm not sure I agree with that, Roka said. Me neither. Bitcoin, yes, it's again, yes and no. Yes and no. The fact that institutions are here means that they will not want to see the same extent of the drawdown that they saw before. They're fine with some drawdown, right? They want some volatility as well. Like, they want to buy sub 100 Bitcoin again, sub 100K Bitcoin again, right? But they don't, guys, a 70% correction from here, if this was the top, would bring us back down to a $28,000 Bitcoin, right? And they don't want that either, because their debt to liquid ratio when it comes to their Bitcoin holding would be at a high liquidation risk. Like, guys, they do not want to allow that to happen. Now, Bitcoin goes to $250,000, then okay, they will probably allow a 70% dip. If Bitcoin tops out at $160,000, well, let's say 160 to 180, then you end up with like a somewhere between a $60,000 to let's just say the top of the 2021 run, $69,000. Maybe you end up with between 70 and 100K bottom. I think the institutions would probably be very willing to take it that low, and scoop up some more sub 100K Bitcoin. So it all just depends. But what is true is that the institutions are never going to let it go to 30K again. I don't believe. So you end up with diminished losses. A 50% drawdown, Bitcoin will recover from that much more quickly. In 2021, Bitcoin recovered from a 50% dip in a matter of 3 months. And to me, that would lead to cycles within cycles, right? Any time that within the time span of 1 year, you can capitalize on a 50% drawdown and recovery from that drawdown. Like, you could, in theory, if you caught the tops and bottoms of the move, you could make 50% both ways. Like, that is not emblematic of the traditional bear market cycle, right? and it leaves some a lot of room there for cycles within cycles and a lot of opportunity even. So that's just me. Let's see here. Bitcoin advocate and market analyst Matthew Crater said that human psychology is the real undercurrent that moves markets, arguing that institutional investors are just as irrational as retail participants. I'm not sure maybe, but the very last Bitcoin crypto bear market from 2021 to 2022 was mostly caused by institutional investors doing really stupid things at places like Grayscale, Genesis, 3 Arrows Capital, and FTX, Crater added. Now that's a respectable point, but I'm not sure how much Grayscale had to do with that. Just in my memory, I look back at it, and it was all of the big players from within crypto that were doing some shady stuff, and they were really big. They were really big kids in a really small kiddie pool, you know. I don't remember it mostly being the actions of like mature institutions coming into the crypto space. That's not how my recollection recalls it, you know, but I don't know. Anyways, coming over here to X. All right, share this tab instead. So I'm just gonna surf X a little bit with you guys before I get into the charts. And what we got here, Sam Price, Mr. Crypto Lifer, says ADA just tapped 76 cents after a sharp pullback. Some see a discounted entry, others call it a falling knife. The truth, it depends on your structure, patience, and risk plan. Markets don't hand out free wins, they test conviction. What do you see here? A bounce or breakdown? Is this an AI post? I mean, it's fine if it is, we all do it. But it just sounds like an AI post to me. And I like to know the difference just because, like, I want to know, like, are you telling me something here, Sam, from your own convictions? Or are you engagement farming? Are you farming some engagement on Twitter? I don't know. Someone says it'll bounce either here or at 72 cents. Okay. Nothing that useful going on in that thread. So, Ellie Tourette. Okay, just a selfie. That's cool. Randy Hipper. I've been enjoying her content lately. Miss Teen Crypto. Because she's posted a lot about her experience going to church in the aftermath of the Charlie Kirk shooting, and I think it's encouraging. You know, she's 21 years old or so, maybe 22. But you know, guys, in the last cycle, her channel was called Miss Teen Crypto for a reason, because she was literally like 18 years old and started her channel when she was 16 or 17. Started her journey in Bitcoin at that young, and I think that you know, we need content creators, not just in crypto, but you know, crypto is part of it, but we need Gen Z content creators that are being a voice for righteousness, a voice for reason, in a very unreasonable society. You know, as society grows more and more unreasonable, like Gen Z voices of truth, justice, righteousness, and reason are a great thing, and I hope that she continues to be that. But let me turn the music down, and we'll just see what she has to say. She said, "I'm shocked, yet I feel the most free I have in my entire life. The shift here is about unity, truth, and righteousness. The way we change the world is by working together."
I am just utterly shocked, but I feel free. Yesterday, with the memorial or the revival, things were very clear to me. And it was clear that we have so much hope for America and this next generation. Over the weekend, I was talking with a lot of people, especially in Gen Z, and everyone feels this overwhelming sense of community, of unity. And even though a lot of people feel as though this might be a force of religion, it's not. What's happening here is people coming together for faith, and faith in humanity, but also faith in the divine to bring us together. Speaking from personal experience, everything I've been promoting since I started my social media over 5 years ago was to talk about unity, righteousness, the truth, connecting people, freedom. And I think a lot of people didn't connect the dots, but for me, it was really coming from the divine, which I locked in more with since March. What I'm ultimately getting at is that the freedom movement, especially when it comes to freedom of thoughts, freedom of speech, being able to go ahead and exchange ideas, these are things that are critical to the growth of a person, of a state, of a city, and even more importantly, the world and the countries within it. So let's keep breaking down these barriers. Let's have that open conversation. And I'm just so bullish on humanity right now. It makes me outright emotional. And I'm so happy we're here together. So spread love, spread peace, and do what you need to do to make this world a better place. Mwah.
So I actually thought that one was going to be more about her journey going to church and stuff, which this is great too. The point is the same, that the aftermath of Charlie Kirk's assassination is really proving to be the stuff that revolutions are made of, the stuff that reformations are made of. And like, I think that it sparked a cultural shift that is not just going to fizzle out or run out of steam. And I think that this could literally be, pun intended, the turning point for the United States back in the right direction. So, yeah, there's that tidbit. Let me get off of her page. Bitcoin has closed above $100,000 for 141 days now. That really is incredible. It's really incredible. I'm going to go to our profile now, and a couple things here. Just in, Bitcoin needs to go up 1.26% to wipe out $3 billion in shorts. So this is pretty big. You have the from CoinGlass, the Bitcoin exchange liquidation map. So it's different than the heat map, but it shows you the price change that's needed here to liquidate $3 billion in shorts, right? The $3 billion level has Bitcoin barely tapping $110,404. This is really, really incredible. I mean, there's way more volume in shorts to be liquidated right now than there is long volume to be liquidated. I mean, almost $18 billion is liquidated if you come back up to a new all-time high, and maybe about $7.5 billion is on the table to be liquidated at $97,000. So, I think I know which number that's going to go to. Let's see here. Let's go to my likes. Quick. Well, I'll save that one for the end for Cardano Spotlight. So let's hop into some charts real quick. On Bitcoin, we're holding extremely flat. Extremely flat. Still, I feel like we've been at 109.4 since all day yesterday. So, what do we see going on here is the question. Stochastic RSI is getting high, but it's not bear diving or anything like that. The RSI is neutral, but it is curving up. We're just holding along so flat along this 21-hour moving average. And it's got to make a decision. The decision is going to be a matter of coming back and tapping this level again, or just breaking up, And with the stochastic RSI getting high on the 1 hour, I'm gonna say it might need to come tap this again, which is only at 108.7. I mean, that's a very small move. MACD is continuing to charge upward on the 1 hour, and it looks fairly strong. You know what? I think that my vote in the poll, I think that I'm going to say that the weekly close, you know what? I need to see where Bitcoin closed on Friday. So yesterday, the close was at $109,643. And I'm hoping actually that we close around that spot on the week. That way we don't create a CME gap. Like, guys, this is the worst place to create a CME gap. Like, I cannot think of a worse place, I mean, except maybe at a lower number. If it drops, it's going to like 107K. I can see that. I cannot think of a worse number to create a CME gap at. Like, if we were to somehow pump through tomorrow, have some kind of weird Sunday pump, guys, we're opening a CME gap at $109,600, which means that we have to come back and reckon with that spot more than likely. So, man, I would just really like to see it, so my vote in the poll is going to be below 110. Mostly because that's just what I want to see happen. But everything looks so flat, it's a real possibility. I mean, we're just flat right along that 21-hour moving average, hanging out right below it. So we could definitely kind of roll over back to that yellow line, or even below. DCA says 107. It makes sense. I get it. But we'll see. The only thing about this is that, you have let me go back to the hourly. Okay, so stochastics are high on the hourly. We go to the 4 hour. Stochastics are high on the 4 hour. And we're below the 21. You know, we could see a pump up to the 21, right? And then reject back down to this yellow line, and then begin our move up on Monday toward the point of control. And that would be beautiful, honestly. And that whole move could happen within the weekend without opening a CME gap. So that would be beautiful, honestly. Like, I mean, look at it, and the setup is here. Like, the MACD is crossing bullish above the, you know, below the 0 line, and typically that's a pretty bullish move right there. So, you know, to come up to the 21, reject back down to the yellow line, and then move up to the point of control starting Monday, starting after the weekly close. I mean, I can see it. You know, this death cross right here on the 4 hour could be indicative of a bottom that already took place. You know, it could be a lagging indicator. And, you know, this would be kind of an area where we resume where we start a high, a low, a higher high, a higher low, a higher high, and come put in a macro higher high above this point right here that triggered so much bleeding. And let's see if the daily chart supports that kind of theory. And I think that the daily chart, you know, shows some support of that theory. Like, the reason why is the stochastic RSI on the daily is nearly 0. So how much slower can we go below this yellow line? I mean, can we? And again, guys, this is the Fibonacci golden pocket. I mean, it's a little bit underneath us, actually. It's, you know, down here at, you know, 108 or so. But guys, this is I don't know how we're going to just pierce through the Fibonacci golden pocket between 0.618 and 0.5. I'll just draw it for you guys real quick. Here we are above 0.618. And we're actually in the golden pocket right now. 0.5 is up here at $111,200. So that's the golden pocket between 0.5 and 0.618. You know, if we go down to 0.786, that would be $104,000. It would line up with the 200 period moving average. So, you know, but we have a lot of volume here to work through at 108. This is a huge volume node. I mean, if we close below $107,920, then we go to at least 105.8. If not basically down to 104. But guys, the stochastic RSI is at 0, and this is why I think that, like, we have to get some kind of, if we were going to do that, we would have to get some kind of bounce up to give it some kind of momentum to fall through. If I can give an analogy to this, guys, this is like, throwing, here's my bullish bounce ball here, right? To give an analogy, it's about momentum. It's a game of momentum. So if it's going to go pierce through the golden pocket at 0.618 right now, at $108,000, like, is it going to do it by throwing this ball off the roof, so that it has some speed behind it to pierce through? Or is it going to happen by just kind of like, 0.618 is the trampoline, and I'm just going to drop it on the trampoline from head level and think that it's going to pierce through? Like, if it's going to pierce through the trampoline, it needs enough height, enough speed, and enough momentum in order to do it. And with the stochastic RSI this low, what it's telling me is that you're trying to drop the ball from head level, right? And you guys might think this is a stupid analogy, and that's fine. but that's literally the analogy. That's literally how the RSI and the stochastic RSI work. One of them is slower moving than the other, which is the RSI. But that's what it's telling me, right? So this stochastic RSI has to come up somehow, and then get a massive dump event, a massive liquidation event from there. Some kind of huge sell-off for some reason would have to happen after we get some higher stochastic RSI in order to really pierce that level, right? So, yeah. That ball just slid under my desk back there. Anyways, so, for right now, I still think that the Fibonacci Golden Pocket at 0.618, $108,000 is the bottom. For right now, unless I'm convinced otherwise, unless I see the stochastic RSI come back up and not be able to get above key resistance, right? If the stochastic RSI comes back up and Bitcoin is failing to get above key resistance levels, then I will say that we have a new bottom. I mean, look, I could be wrong. Like, we could just, still have the momentum to fall through. It can still happen, but the stochastic RSI is not supporting that idea to me right now. So, let's take a look at a little bit of CoinGlass data. So, fear and greed. The last time that fear and greed peaked off of this exact level, it actually led us up to a huge rally. So the last time fear and greed peaked off of or bounced, created a little V-shaped peak to the bottom right here. The last time fear and greed, hit like about 28, 29, and then had a sharp point up, it led to a huge rally. So, I mean, that could be, guys, we made lower lows on the fear and greed. If you think about it, you really think about it, that's kind of another form of hidden bullish divergence. Think about it. Look, you would normally do this with the RSI, right? But you draw this from here to there, that's a swing up on price. And you draw this from here to there, and that's a swing down on the oscillator, right? So you have a lower low on the oscillator, and in this case, the oscillator is fear and greed. So as fear, as the fear that exists in the market made a new low, the price did not make a lower low, right? Meaning that as more fear came into the market, the price actually held a macro higher low. Hidden bullish divergence, and what it signals is the continuation of a macro uptrend. And let's actually go back to the RSI and see if we can confirm that on the RSI. Yeah, it exists on the RSI as well, right? It's slight, but it's there. That is a lower low on the RSI. That is a lower low on the RSI, a swing down on the RSI with a swing up on the price. So, you know, that's showing a hidden bullish divergence still, but we come over here to this CoinGlass data and the fact that, and I've never thought about this until this moment. Well, what does hidden bullish divergence tell you on the RSI? It tells you that the relative strength in the market, the momentum in the market, went down while price held a higher low. Grippy, there you go. Bullish chart. Thank you for that. If you're just joining us, smash the like button, subscribe to the channel to join the Brew crew, the most hydrated crypto community on YouTube, and let's get it. So guys, you know, we have momentum comes down, but price does not come down as much as momentum does. Meaning that how much more momentum does it take to bring the price down lower? It's the same thing here on the fear and greed. You know, fear came into the market, and it wasn't enough to make a macro lower low. So how much more fear needs to come into the market in order to do that? You know, what else needs to happen? There's already fears of government shutdown. Maybe it actually happening. Okay, maybe that would be the thing. Maybe that would do it and invalidate this, and fear would go lower. Maybe. You know, time will tell. But as of the moment, the oscillator is trying to make a sharp turn upward, and you know, if that holds, then guys, like, fear will begin to leave the market, and the price can continue upward. So they're buying this fear right now. Like, look at the fear and greed, and look at this indicator down here with the whale, the whale index. The whales are continuing to buy this fear. So there you go. Last thing, Cardano Spotlight. The midnight glacier drop is extending by 16 days. trying to let as many people claim this token as they can. And guys, Midnight is a 4th generation blockchain. I believe that it's going to be the most advanced blockchain ever built, and it's going to mean enormous things for Cardano. And guys, this is creating a network effect like no other thing has ever done. So far, 125,000 wallets across 8 ecosystems have claimed their night airdrop, and so in one fell swoop, they're distributing the consensus power of the network. They are building cross-chain synergy like nothing else that we've ever seen, and they are making Cardano more bullish. So there you go, Cardano spotlight, and we will have the most parabolic bull run in the history of crypto. Always buy the fear. That's the name of the game. Exactly. Yeah. Thanks for coming in. We appreciate you. Hope you subscribe to the channel. And because you came in and commented, let me look at Grippy real quick. Grippy. Dude, $1 million market cap, that's down there. Share this tab instead. So on the for the last month, like, we're seeing it come up to actually set new highs on candle closes. So for that reason alone, if you want to take a flyer on it, you could. Don't overexpose yourself to anything that's this low in market cap. But if you want to take a flyer on it, you could. It has the highest candle closes that it's had in a month, and it's not that far away from its last important breakout point. So yeah, I can see it. Thanks for the call, and hope you like and subscribe. Join the Brew crew. Until next time, cheers.